The MACC says there are still 18.9 billion ringgit of assets linked to 1MDB that have yet to be accounted for. Anti-Graft Chief Commissioner Latifa Koya says these assets are spread across at least 5 countries. She adds that the MACC and the National Finance Crime Centre are working with the nations involved to recover them. The Anti-Graft Chief explains that the job is complicated as the assets exchange hands via multiple transactions. The 18.9 billion ringgit figure is not final and merely an estimate. Latifa declined to give further details, citing pending investigations. The US Justice Department believes some $4.5 billion was plundered from scandal-hit 1MDB. However, AG Tan Sri Tommy Thomas previously told the Nikkei Asian Review that Malaysia estimates the figure to stand at over $10 billion. Bank Negara left its key interest rate unchanged as it expects the country's economic growth to come within projections and sustain that pace going into 2020. BNM's Monetary Policy Committee decided to maintain the OPR at 3%, saying that at current levels the policy remains accommodative and supportive of economic activity. But the central bank warned that the projection remains subject to downside risks, mainly stemming from uncertainties in global economic and financial conditions, as well as weaknesses in commodity-related sectors. In a statement, BNM said that the latest indicators are in line with expectations, suggesting moderate expansion of economic activity for the third quarter. Growth will remain anchored in firm private sector expenditure, and while private investment is expected to remain modest, household spending will be bolstered by continued employment and wage growth. BNM said that on the external front, while exports will continue to be affected by slower global demand, this will be partly mitigated by its diversified structure. Genting Malaysia's wholly owned subsidiary Genting USA had on Monday in the US purchased 13.2 million shares in Empire Resorts from Kian Huat Realty 3 at $9.74 per share. This transaction was carried out under the planned Genting Malaysia KHJV to privatize US-listed casino operator Empire. Genting Malaysia said that following this exercise, Genting USA now holds a 38.3% equity stake in Empire on an undiluted basis and a 33.3% on a fully diluted basis if all the outstanding preferred stock were converted. Kian Huat is controlled by Genting Group boss Tan Sri Lim Kok Tae. To recap, in August, Genting Malaysia and Kian Huat had entered into a binding term sheet for Genting USA to acquire 13.2 million shares in Empire for some $129 million. Fraser and Neave Holdings saw a 17.7% drop in fourth quarter FY19 net profit to 68 million ringgit due to the absence of a one-off net income, among others. However, revenue grew by 2.9% to 974 million thanks to higher contribution from F&B Thailand. Full-year numbers were better, with net profit improving 6.1% to 410.3 million and top line growing by 5.3% to 4.08 billion from 3.87 billion ringgit previously. As a result, FNN is recommending a higher final single-tier dividend of 33 cents per share, subject to shareholder approval. This would bring its total dividend for FY19 to 60 cents per share. F&B Thailand continues to be the group's best-performing division, driven by strong growth in Thailand, Indochina and export markets. Going forward, FNN is positive on its plan to expand its dairy offerings following its proposed acquisition of 4,454 hectares in Chuping Perlis. CEO Lim Yu-ho said that this investment will present incremental growth opportunities for FNN's future growth prospects. He added that FNN intends to expand fresh milk consumption in the country while reducing reliance on milk imports. Westports Holdings says third quarter net profit rose 12% to 159.2 million ringgit on the back of double-digit growth in container volume and the implementation of container tariff hike on March 1st. Quarterly revenue rose 10% to 460.4 million ringgit. Westports did not declare any dividends. Group MD Datuk Ruben Emir Nyanalingam says Westports managed to sustain its momentum for container throughput growth against a backdrop of moderate industry expansion due due to strong support from its clients. On its prospects, Nyanalingam says Westports is expecting to achieve a double-digit percentage growth rate over 2018. He explains that in order to support its clients' growth and the ever larger container vessels being deployed, the port operator is currently planning its massive expansion project, Westports 2, that should nearly double its current capacity to 27 million TEUs. The company is aiming to obtain the government's approvals and concessions by mid-2020.